a different kind of storm that's been brewing. And as the closing bell on Wall Street, another tough day for the markets. The Dow took another big hit, dropping 537 points. And this graph from the last month is not pretty. This is the S&P 500. It has lost 10% of its value over the last 4 weeks. Why does that matter? Well, 2/3 of Americans have a retirement account, and most of those are tied to the markets.
The economy is strong. It came into the year doing very well, but it can't digest the kind of tariffs that we're talking about here.
Lower has been triggered in part by the Trump administration's tariff battles with just about everyone across the globe. Today, the squabble was with Europe. The White House earlier this week announced a 25% tariff on aluminum and steel coming into the U.S. The European Union responded with 50% tariffs on boats, motorbikes, and bourbon. The president says if those aren't rescinded, he's going to slap 200% tariffs on European wines and champagne.
I'm not going to bend at all. Aluminum or steel or cars. We're not going to bend. We've been ripped off as a country for many, many years. We've been subjected to costs that we shouldn't be subjected to.
While all of this plays out, many of you are watching your savings and your investments shrink. Earlier today, we talked to Jason Rericha with YellowWood Wealth here in Charlotte. I appreciate you stopping by and talking to us.
Absolutely.
How nervous are your clients these days?
Well, you know, we're getting some phone calls, I'll say that. We try to coach them that these types of things happen from time to time, but we're definitely getting some more phone calls.
This dip we're seeing right now, is it all tariff related or are there some other issues at play?
Well, I think it's complicated. When DeepSeek came out, right? DeepSeek was the Chinese AI chatbot that was supposed to be able to compete with ChatGPT in that, and they were doing it with cheaper chips and cheaper technology. And then we saw Nvidia take a big dive to start the decline here. And Nvidia, because the S&P 500 is a market cap weighted index, it was 12% of the index. So if Nvidia takes a big hit, the whole index is going to start taking a hit.
Fundamentals of the economy overall, are they still strong?
There are things that do look good right now, but you can take the same things and look at them from a different perspective, and maybe they don't look as good. If it's more expensive to import things, if it's more expensive to sell things, all that's going to get pushed on through to the consumer, which can ultimately affect GDP. That's an issue. Inflation, that's another huge issue. I've got 3 kids. Every morning for breakfast, we've got eggs, we've got toast, we've got milk.
You're seeing it.
Yeah, eggs themselves up over 300% since January of 2020. Now, granted, some of that's the bird flu epidemic that'll pull back, but you want to look at milk, that's up 25%. Bread, that's up 43%. Multiply that amongst several kids, make a couple peanut butter and jelly sandwiches, cut up some apples for lunch. You're over $50 just a week to just feed your kids breakfast and lunch.
A lot of uncertainty right now. Does that make it different than previous dips that we've seen in the market?
2023 and 2024 were great years, right? Everybody saw that. Everyone saw their portfolios grow quite a bit in value. And to see it go down now, that's kind of shocking. But if we take historical context into consideration here, on average, the stock market drops 5% 3 times a year. It drops 10% once every 16 months. It goes down 20%, or what we would call a bear market, once every 5.5 years.
So with all that in mind, what are you telling your clients right now?
If you're doing financial planning and your investments the right way, you don't have to like when the market goes down, but your portfolio and your financial plan should be built to be able to withstand it. Now, if you are not in that situation, sometimes you do need to make some adjustments.
Does stage of life matter at this point?
Oh, 100% matters at this point. So if you're young, you got to look at this as a golden opportunity. Every time the market has a big pullback like this, you should be investing as much money as you can possibly invest. But I think the retirees or pre-retirees, that's where this makes a huge difference. And there's several things that I think they need to be considering, most importantly around retirement income planning.
As I say too, because I'm sure you get asked all the time, like, how long is this going to last, right? How much patience do I need to have? Really hard to answer, right?
It is really hard to answer. I tell people all the time that, you know, as difficult as it is, you should focus on controlling what you can control.
Bottom line here, I think you're telling people don't panic right now. And his history does tell us, whether it's 6 months, a year, 2 years from now, we won't remember this stretch, will we?
Yeah.
You know?
Often, I think, again, you know, Jamie, I think it goes back to having a sound financial plan, knowing that you're on track to achieve the things that you're trying to achieve, living a meaningful and fulfilling life. Have a budget, have an emergency fund. If you have all of those things in place and you're on track to achieve what you want to achieve in life, sometimes you just got to hold your nose and keep walking because this too shall pass.